This is a replay from December 2nd, 2022, as we look at the intermediate analysis in the stock market at that time. We're showing this because we have had a number of people that have been confused about the analysis we have recently shown, and we wanted to bring this forward for clarity so you could see what we said literally a couple of months ago and how that played out now. So I hope you enjoy this. Question is, are we now in a stronger rising phase where this key level over here will not be broken, or will it be broken? And if it were to happen, it would likely happen way out here in the February-March period where we get into that next period of risk. That means that this minor pullback right in here is likely to hit supports and then move up again. Right over here is what's called a VTL, valid trend line, which comes off cycle peaks. You can learn about valid trend lines in our cycle analysis workshop. And you can see in here it kind of gets right up to that VTL and then begins to pull back. And there are thick resistances up here. This is the major 50 at 414. This is the intermediate 61.8 at 419. Our original target, first target, was to get up to 406, and you could see it easily did that. Now we're very soon going to get into a period where this is likely to correct. Now, here on Friday, on December 2nd, the news was bad on inflation in the employment report, so the market began to pull back, but doesn't necessarily mean that the top of this minor advance is over. You still could get higher ground in here. And again, 414 is our next target up here. But this 414 to 419 range is going to be very difficult to get through. The expectation is that there will be a pullback here into the somewhere mid to late December period, and then move up again in January. And there is an important VIX trough. The low in the VIX is out in that mid-January period, and that speaks to the fact that we believe that there will be a peak somewhere out over here in mid-January. So if this were to follow the pattern, you would get some gyration right in here, a pullback somewhere around near the 386 level, and then that would occur sometime before year end. And then another upside move to try to test these resistance levels here again. Now, this is an upgrade that we gave it today because now that we've gotten up to the VTL and past this 406 level, the likelihood is pretty good that after this pullback, the next peak will be above this peak. So we've upgraded that because of the probabilities based on the information that comes out of the cycle patterns in here. So again, based on the weekly, a pullback here into sometime in December, and then another rally, and then this is where the big period of risk comes in from sometime January through March, where there's a potential for a decline that would be very severe.
Well, I'm going to the city and I'm gonna do a steady show.